Good day, grade 12s. We are going to do a worked example on creditors reconciliation. I have sent through a PDF on the notes. Go through them. There's also a worked exam, but no explanations. We are going to use a combination of our textbook and also these notes. Remember, this is a grade 11 topics. We must be able to concentrate and take us through. Now, the question reads, Carol Traders buys goods on credit from DM suppliers. The business received a statement for June 2018 from the creditor. We are required to calculate balance of DM suppliers in the creditors ledger of Carol Traders. Show the changes to the figure 47,064. We are also expected to prepare creditors reconciliation statement for DM suppliers on 3rd June 2018. Now, we have the creditors ledger and the statement that was received. We want to do our step 1, which is comparing. We compare invoices with invoices. We compare debit notes with credit notes. We compare check numbers with receipts numbers. We compare discount with discount. We compare EFT with EFT. Now, I have said when you are comparing, check the name of document, check the site it is recorded, check the amount before you conclude that the amount is common. Now, from our example, the ones in green are common. Those ones which are in red, it means they are not common. Additional information will help. Right. Balance at the beginning 35,920. It was common from the ledger and the statement. On the 5th invoice 346, we have recorded it as 11,808. The supplier recorded it as 10,296. It is not common. A debit note 69 on the debit side 860 was recorded on the same date as credit note 109 816. The problem with this one, it is recorded on the same side on the debit, so it is not common. We have to check the sides as well. Debit note is on the debit, credit note must be on the credit, so it is not common. On the 13th, we have checked 207 222,788. We compare it with receipt 5140. Correct, it is common. Discount 3,532 and no discount this side, it is not common. Invoice 135 6,929 on the credit, this side it is not there, so it is not common. EFT 675 1000, EFT 675 1000. Debit and credit, it is common. Invoice 378 for 7,188 on the credit and on the debit, it is correct, it is common. Invoice 396 88,029 on the credit and invoice 396 9,810 on the debit. It is not common because of different amounts. On the 30th, invoice 407 4,526. We don't have it in the statement. Then on the statement 25 June, we have interest for 29 rands. We don't have it in the creditors ledger. It is not common. So as we go and read additional information, it is going to explain to us the differences. When we check out the differences, our main aim is to ask who is wrong. If the business is wrong, we record that transaction in the creditors ledger. If the supplier is wrong, we record the same transaction in the creditors reconciliation statement. So when you approach additional information, read for understanding to answer the question who is wrong. Now, we have our answer book, the creditors ledger, the one on above, and the creditors reconciliation statement below. We have entered our provisional totals in the ledger 47,064 in the statement 40,271. Now we want to go and read additional information for us now to answer the question who is wrong. Invoice 346 on 5 June 2018 was correct according to the statement. It was correct according to the statement, which means the ledger was wrong, the business therefore is wrong. Because the business is wrong, we record transaction 1 in the creditors ledger. But where there are two amounts, we always show records and record the difference. After recording the difference, you have to decide whether you must add or subtract. So this invoice, we have recorded it in our ledger as 11,808. The supplier has recorded the same transaction as 10,296, and they are correct. What it means is invoices naturally increases our account. So we have increased what we are owing. To correct, we must decrease by subtracting the difference. Transaction 2 or additional information 2. DM suppliers made an error when recording goods retained on 7 June 2018. We are told plainly that the supplier is wrong. So we are going to record transaction 2 in the creditors reconciliation statement. We have recorded our 816 on the debit. They have also recorded on the debit instead of credit. We know from our notes, if an amount is recorded on the wrong side, we double the amount. So we have to double 816 times 2 to give us 1,632. Now, whether we should add or subtract to know, goods retained, naturally they decrease. So we are going to decrease this amount. Transaction 3. Carol traders qualified for discount with the payment on 13 June 2018. DM suppliers granted only 2,532 as discount. They will show this on their statement next month. What happened on this transaction? If you go and check the statement on the 13th, in the ledger we have given ourselves discount of 3,532, and the supplier did not record the discount. Now we are told that the supplier granted us only 2.532 instead of the 3.532 that we have given ourselves. We can conclude therefore that we are both wrong. The supplier is wrong in that he did not record the discount. We are wrong in that we recorded too much discount, 3.532 instead of the approved 2.532. Since both are wrong, we are going to record transaction 3 in the creditors ledger and in the creditors reconciliation statement. Let us start in the creditors ledger. We have overstated the discount. We have recorded it as 3.532 instead of 2.532. The difference is 1,000. So discount naturally decrease. To record an overstatement, we must add back the difference. So that is why we are adding the 1,000. We are adding back the 1,000 to decrease our discount to 2,532. Now, in the creditors reconciliation statement, the discount was never recorded. So we are recording it as like for the first time. So we just enter 2.532 as discount, and discount decreases, we put that in brackets. Transaction 4, invoice 135 for 6,229 was recorded incorrectly in the creditors ledger account of DM suppliers. This purchase was from Pandey suppliers. Now the business is wrong here. What they did, they recorded a different supplier transaction into the account of DM suppliers. So we are wrong, we included a transaction for someone else in this account. What we have to do is to record it in the creditors ledger. But how do we record it? We simply remove the invoice from the account of DM suppliers. So we are subtracting 6,129 from the creditors ledger. Transaction 5, a trade discount of 10% was deducted on invoice 396. DM suppliers did not take this into account. This will be rectified on the next statement. It therefore means the supplier is wrong. We gave ourselves discount. The supplier confirms that even though he did not record, he promises to rectify that next statement. But we are not going to wait for next statement. Our account must balance now. So we are going to show him that you are wrong by taking this amount to the creditors reconciliation statement. We have to calculate the discount. We have recorded after subtracting discount, our invoice was 8,829. They did not subtract discount. The raw amount was 9,810. The difference was 981, which is our discount, and discount naturally decreases. We are decreasing our creditors reconciliation statement because the supplier was wrong. Transaction 6, we are told that the statement shows transaction up to the 25th of June. So additional information was 1 to 5. From the notes we have said, if you have done with additional information, you might notice that we still have unticked items in the creditors ledger. Unticked items in the creditors ledger will be for outstanding payments or outstanding invoices. We said these are timing differences. When we did the transaction, the statement was already printed. So in this case, we have transaction on the 30th. We bought stock worth 4,526. The business is correct. We have recorded it. The supplier is wrong. They did not record it. So we take this invoice to the creditors reconciliation statement. Details will be outstanding invoice 4,526. Similarly, we might have unticked items in the statement which are not in the ledger after all the additional information. In this case, it is for interest on overdue account. The business did not know of this transaction until we received the statement. So the supplier is right, the business is wrong. We record the interest in the creditors ledger. But interest on overdue account naturally increases our account, so we have to add the 29,000. So the 29 runs into our creditors ledger balance. We have come to the end, the moment of truth. We are adding and subtracting our creditors ledger, starting with the opening balance to give us a total of 39,652. Likewise, we are going to add the creditors reconciliation statement, starting with the opening balance 40,271 to give us 39,652. So we say our creditors reconciliation statement is balanced.